Hello traders, Gary Wagner here, approximately 11 a.m. on Tuesday, May 15th, 2012, and this is the daily report for gold and silver. We have both gold and silver lower this morning, with gold trading off currently about $12.40. Cash price is $15.45.10 with a low of $15.40.70 and a high of $15.65.70. Silver currently trading off about 45 cents, about 1.6% lower on the day, $27.83 with a low of $27.51 and a high of $28.57. Traders, the underlying word right now is strength of the U.S. dollar. That's really what's been pushing this market more than anything else to the downside. And let me go ahead and pull up a chart. We're looking at a 432-minute Henkin Ashi chart of the dollar index, a basket of 6 different currencies against the dollar. Now, what I want to look at, we talked about last week different resistance on a technical basis, different resistance areas. Now, as you can see quite easily, we've gone through this first level of resistance right in here. And because it's a Henkin Ashi chart, we can tell that it's trading up near the high by where the black pointer is. Other than that, in other words, if it can safely make it over that, you've got, and I'm trying to line this up as straight as I can, realize you should be as parallel as possible, but your next real level is going to be about 82.50 when you take a look at the market in that way. One of the things that you'll notice is really the absolute strength that we've had here. And to do that, I'm really going ahead and blowing this chart up. But what you can see is an unobstructed, since the end of April, move to the upside in the dollar index from a low of just above 78.60. And you can see that it's climbed quite substantially. And when we look at it in this way, once again, I'm trying to line it up as straight as possible. But as you can see, it is clearly broken above any kind of resistance it might have found there on a technical basis. Of course, what we are working with right now is the fact that there is issues going on in Greece. They're trying to put together their government. We have continued concerns over the Eurozone and the sovereign debt crisis. Let's take a look first at our June gold. This is off the COMEX, and there's a couple of things that we want to look at. Most importantly, we're going to start with the MACD, the MACD. And as you can see on this MACD, what I find interesting, and we pointed this out a little bit on Friday, is that we got our cross, and our cross, of course, put us into our sell mode. But it was never really able to really turn around and give us any kind of a buy signal. As you would right here, you get this cross, or here you get this cross. But what happened here is it just kind of meandered back and forth and then had a sharp turn to the downside. Now, when did it have that sharp turn? Well, obviously, it had the sharp turn when this broke through that compression triangle. And let me just go ahead and blow that up a little bit. You can really see when we blow this chart up, again, this is a daily chart. The Henkin candles have been just straight red all the way down. But ever since it crossed, look at the acceleration that we got to the downside in this market as this broke through what I believed to be critical support. We did get a marketplace that once it went through has sold off. You've got 1639 here. This is the high as it broke through. That's also a 23% retracement, I believe. And to look at that, we'll go to our weekly chart. But you can see that this is on the weekly. Once it broke through, you've had this really strong move down in the marketplace itself. Now, where do we think it's going? We talked about a couple of spots, but the first area, I believe it has a high likelihood, and as you can see, we're pretty close to it now, but a high likelihood of actually achieving is going to be 1520, and that's going to be basis cash. We've had a low of about 1540. This is right in here. On the cash was 1520. It's a little bit higher in the June gold contract itself. And then our last chart for the day for the gold market, we're going to go back to a weekly. This isn't our cash market, Heikin Ashi format. And let's kind of line this up so everything comes into play. And really what's interesting to me is once we got this breakout, it doesn't look, of course, as severe on our weekly in this particular type of chart because of the way it's scaled. Sitting right now, the market has been trading drastically lower. There's no doubt about that, trading around 1543 in cash. I have relabeled because it's quite obvious when we have what's called a compression triangle, which is what I was under the assumption we would have. It would have had to have held this line right in here. We would have had one more wave 4, a wave 5, and then our thrust up. However, we were incorrect. The market's going to do what the market does. We have to react accordingly. And so once we saw the market had broken through there was really only one obvious count. This is major 3. We completed that. We are currently in our major 4th wave. It's corrective wave. It's going to be composed of 3 intermediate waves, an A, a B. We are currently in our C. If it moves to an equal low, we'll get a flat. If it moves below it, we will get what's simply called a standard zigzag. And traders, lastly, we're going to take a look at the silver market. As you can see, it's been my belief that this market not only is headed lower, but in terms of the area that I believe it's going to go to, my initial target right now is to test, on an intraday basis at least, 2561. And that is based upon this support line here. If it doesn't make it quite to there, it's probably going to go ahead and try to test these intraday lows at some point. And at that point, it might just spark up, but we're going to have to wait and see. But right now, we want to keep an open mind that this market is probably going to head lower and on an intraday basis come in and test 2561 or close to it. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.